Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to Discovery Watch, John.
Jim, it's great to be back.
John, one of our Discovery Watch juniors, Playfair Mining, dropped 50% last week after reporting results from its drill program on the Ox Mountain project in Ireland. Is this goring of the ox justified?
Well, the exploration industry suffers a twofold curse. If management does not promote the success potential of an exploration play, everybody complains. But if management does talk up the potential, as Don Moore did in November, especially at the Metals Investor Forum, ahead of which the Resource Maven also published a recommendation, and the results do not match up to expectations, the stock gets punished. We are not yet in a glass half full type of market where results that fall short of confirming a home run discovery can be spun as encouraging as justification for a follow-up program designed to trace the smoke to a fire. We saw this earlier this year. Same thing happened with Canalaska Uranium, where De Beers drilled a number of smaller targets, did not intersect kimberlite. The market immediately sold off in a brutal manner, even though De Beers has yet to drill the larger targets early next year when the ground is frozen. We also saw it with Serengeti on its Quenica project. In this case, management had not talked up the results. The stock forum posters had dreamed up all kinds of fancy results coming, and when the actual results came, they were good results, but they were not what the fantasies expected. So boom, down went the stock 50%. And one of my own other recommendations, Uravan, underwent a similar smashing in the market, though in this case it was helped out by management injecting emotional disappointment into the news release itself, which only further discouraged shareholders from bailing, thinking that the story was killed. In none of those cases the story was killed. And in the case of poor Playfair, the way it wrote its news release was not helpful either in getting shareholders to just sit back and relax and say, okay, yeah, what are you going to do next?
What was wrong with the way it reported the results for its 9 drill holes?
Well, when I get a news release with results, drill results that I've been waiting for, the first thing I look for is a table of results. Ideally, all the holes from hole 1 to 10, whatever, the ones that had nothing in it, the little NS, meaning no significant results, and then the bigger ones where there's like maybe 50 meters of 0.3 grams with a little portion of it, a smaller interval of maybe 2 meters of 5 grams showing where there was a spike within this. This is what I look for. If I do not see a table with the first quick glance of a big long news release, then I already know, the results are not good. And in fact, Playfair did violate this rule by not including a table for the 9 drill holes that it reported on. In fact, the first 2 paragraphs were all background about the project. As soon as you have, start off a news release that's supposed to be reporting results and you're doing background, that's already a warning sign. The results are not going to be good. Now, they did then finally get around to saying, okay, we got all the holes achieved grades in excess of 1 gram per ton. Now, that's normally good. 1 gram per ton, that's great. If you have 9 holes on a brand new target where you had no idea what the geology actually was going to be because it's all under pasture, in this case sheep pasture, it's great to hear that. But then they go ahead and say, well, the best intersection was 2.9 grams of gold over 0.85 meters, and the next one was 7 grams over 0.4 meters. In other words, really short intervals. But none of this, okay, we got 20 meters of 0.6 gram within which there is a 7.32 gram per ton. So the way they presented the news release in this sort of half-baked manner that made it really difficult to understand what they didn't get or did get, that was a turnoff to the market. Now, one of the reasons the market had gotten fairly excited was that when they drilled this, they were targeting a structure associated with boulders, that are float, that aren't actually in situ. They're not part of bedrock. They're just sitting there nearby. And this stuff ran as high as 17 grams per ton. And they assume that because it's close to this 4.5 kilometer structure that they can see from the geophysics, that this was probably the source for these rocks. And when they drilled it, they got not just the structures, the sort of vein type, the veins within the structure, but they also got alteration in the wall rocks surrounding the structure, which is something that is not seen at the Dalradian's Coronalt project to the northeast of this belt in Northern Ireland, where you have a series of discrete veins that are mineralized, half-ounce gold or better, and the surrounding rock is pretty dead. In this case, they say, wow, the fluids didn't just sneak along the veins, but also penetrated the surrounding rock. And in this kind of system, you don't see visible gold, so they were hoping, okay, maybe we get high grades within the veins and then lower grade in the surrounding altered wall rocks. Well, they obviously did not quite get what they were hoping for, and they presented the news in a manner that made it look like a bust, when in fact it was quite encouraging to get, smoke within this blind structure associated with higher grade float boulders at surface. To me, it's actually an encouraging sign.
Is management, in fact, ashamed of the results?
Well, I talked to them about the results, and they were far more disappointed about the market's reaction. They think it's a technical success, and I'm inclined to agree with them. I mean, this whole project was generated by Richard Parker and Andy Bowden, the prospectors who came up with the idea that this Ox Mountain region has potential for major gold systems. And they don't have any outcropping bedrock. They had to drill these targets blind, and they only targeted a 200-meter segment of a 1.5 kilometer stretch of this structure, along which they have found these mineralized boulders. And the geophysics says this structure extends for 4.5 kilometers. So it is a substantial system. And one could say, well, this is possibly something like the orogenic deposits of the Abitibi Greenstone Belt, which have significant vertical extent and can be very high grade, and often the gold is in splays that come off the main structure. So I think they've come up with evidence that this is a significant mineralized system, but they didn't hit the prize right away, and they need to continue work.
If it's going to take a lot more than one program to kill Ox Mountain, what does the company plan to do next?
Well, they are regretting that they focused on such a narrow segment of the structure. The next stage is that they're going to step back and do a number of wide-spaced holes along this structure just to understand the geology better. So the next round, and they are funded to do this, is not the kind where you're going to have high expectations, because now they're starting to build the geological context for a more focused effort. And they also now believe that the IP surveys, which are designed to detect the presence of sulfide systems, which makes sense since the gold appears to be associated with sulfides, they will also do this over the structure. And with the combination of the wide-space drilling and the IP survey, they will generate a new round of targets, which are going to be, again, blind because there's no outcrop in this area, but that would be the attempt to really come up with a winner. So I think over the next 6 months, this project is still on track, and maybe they get lucky on these wider spaced holes. Expectations will be lower, but speculators should be taking a longer, big picture view with projects like this.
So should shareholders who believe Playfair is onto a potential major new gold system just sit back and relax for the next 6 months?
Well, no. I mean, one of the misunderstandings out there is that exploration plays are like a lottery ticket. You buy it, you put it in the drawer, and then when the draw has been held, you check and see if you have a winning ticket. That's not how investors interested in this high-risk, high-reward game of discovery exploration should treat it. they should, in the first case, they should be bugging management about the not so great way they presented the news. They should insist on more graphics explaining the geological context, and as they gather more information, beef up the website, show the audience what it is that you're gradually putting together, enlist the audience to participate in the exploration process so that they have a better understanding of what to expect when the results do come in, and in a better position to interpret whether this is encouraging or whether this is discouraging. Right now we have a psychology out there where the public expects some huge 100 meters of 15 grams per ton hole as the only validation of the exploration play. You only get those kinds of results once in a while. Now, there's also some potential for surprise. They have moved the drill 11 kilometers to the northeast on what they call the Cabre target, which is distinct from the one, the Clunacool, where they just did all this work. They're in the process of drilling the second hole. They seem to be puzzled by the rocks. There is float at surface, and management is not jumping up and down with any high expectations. So, Mother Nature likes to trick explorationists, get them all excited by showing something that might be good, show them something bad that doesn't have any promise, and lo and behold, that which appears to have no promise could give us a great result. I like Playfair's Ox Mountain project because it is in Ireland. It's in a region that does not have a history of substantial gold mining. It would be fantastic if they can actually demonstrate that these orogenetic lode deposits do exist in this part of the area, that this part of Ireland is going to become a gold mining camp, and a little junior like this, which is in the forefront of having picked out the best ground, would become the target of a substantial audience, which would include the Irish investors themselves, who would love to invest in a brand new discovery play in their own backyard.
Well, if you take a look, John, at history, the Celts were famous for their gold and jewelry. They got that gold from somewhere.
Yes, and it's all mainly from placer, little small placer deposits. The source has never really been found. So finding a bedrock-hosted source, it could be like in 1849 in California, where they found all this gold in the American River, and after they mined all that out, they went upstream and then found the mother lode gold deposits in the foothills, which also went down 1,000, 2,000 meters and ran high-grade gold. So something like this could happen to Ireland, and if it did, it would be very, very exciting.
There really could be a pot of gold in Ireland. Maybe a big pot.
Some evil little, what do you call those guys again sitting on it?
Yes.
A leprechaun, yes, a leprechaun.
Another Discovery Watch Junior, Sirios Resources, recently published results from its summer drill program at Chichu, and the market also reacted negatively. In fact, one newsletter threw in the towel. Is it game over for the Chichu project?
Well, this is a case where, unlike Playfair's Ox Mountain, where they have not spent a huge amount of money, here they spent $8 million since 2012 when Sirios took on this project and focused on this tonalite intrusion. This project is frustrating in that it'll produce long, low-grade intersections, and then it'll be this high-grade spike in there. And so, yes, you've got this big alteration system, but is there a high-grade zone or a number of high-grade zones within this sort of weakly mineralized system which could be developed as an underground mine? And at the beginning of the year, they had come to the conclusion that perhaps they were misinterpreting the orientation of the controlling structures. They had thought that it was the margin of the tonalite intrusion, which was the controlling structure, so most of the holes were drilled in a southwest direction. And then they realized, there are these discrete structures that run northeast, southwest, and so we would be only nicking them occasionally. So they turned the drill around and started drilling them in the opposite direction and got better results, and at PDAC we got the first big sort of eruption of excitement that, whoa, here's something, we're finally figuring out the structural controls. Well, they've done a substantial 10,000 meter round of drilling in the summer, and they have not really given us results that show that it all hangs together. They have 10 more holes outstanding. They expect to get those in mid-January. They are all in the southeast corner. But one of the problems that they have encountered is that the visible free gold in the system is creating a nugget effect. Sometimes they see visible gold in the core and they get all excited and are disappointed by relatively low grades for that interval. Other times they get high-grade spikes and they had no expectation of getting anything particularly interesting in that segment of core. So they've had to do metallic sieve assays to try and properly assess the gold content. Their next step that they're going to have to do is in the southeast corner, start drilling this on a 50-meter grid, develop protocols for measuring the system, and I think they're probably moving away from this idea of underground high-grade gold mine, but back to the original bulk tonnage scenario, which when they did the work 3 or 4 years ago was going to be 100, 200 million tons of 0.4, 0.5 grams per ton gold. Well, that's an optionality play. You need gold at $2,000 plus to make that interesting. But they now believe that if they can better get a handle on these higher grade structures within the system, get a way of measuring the gold properly, it becomes a statistics game of making a mine, a deposit out of this. They also plan to drill some holes when the ground is frozen to the northwest of the main zone area, where they have had some sniffs. There's still lots of potential up there, so it's too soon to write off the whole project. But the Treasury's down to $2 million, with another $500,000 coming from the Quebec government tax credits. So for this company to really tackle this project next year and be in a position to make a difference, they will probably need to refinance ahead of next year's work.
Discovery Watch with John Kaiser will be right back after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back to Discovery Watch with John Kaiser. Do you have any new Discovery Watch candidates?
Well, one of my bottom fish, Probe Metals, which was the spin-out from Probe Mines, which was probably one of my best successes in the past few years when it was taken over by Goldcorp in January 2015 for a half billion dollars at around $5. It produced results for its Val-d'Or East project in Quebec. It's about 25 kilometers east of the city of Val-d'Or itself, and it has signaled that they may have found a new diorite zone similar to the one that Cambior mined more than 20 years ago, depleted, and this was intersected almost by accident at a depth of about 400 to 800 meters. Now, the story here is they acquired a junior called Adventure Gold earlier this year through an amalgamation, a friendly deal, and Adventure had assembled quite a portfolio of interesting projects in Quebec, but it was having difficulty getting traction. Apparently, Quebec-based companies have a harder time getting the attention of Bay Street, whereas Probe is a Bay Street-backed company. Now, Adventure had put together a resource for the new Bellevaux zone, which was related to the old Bellevaux mine, except that instead of it being a northwest dike system of reasonable width, which was underground mined down to about 300 meters, Adventure was tackling a series of east-west quartz tourmaline veins and putting together a bulk tonnage type of scenario. So that actually came up with about 770,000 ounces. And so what the probe was doing was drilling a series of sort of north-oriented holes to better delineate or define this system of east-west veins. And for whatever reason, they decided to drill deeper than the 300 meter limit for an open pit operation, and they managed to snag a new unrecognized diorite dike that has high grade mineralization at a depth of 400 to 800 meters. So now, in addition to this bulk tonnage scenario that could end up being 1 million ounces of near surface gold, they have an underground high grade potential whose limits need to be defined. So this is a relatively new discovery, and the stock, which had been sort of following the general malaise in the market and had dropped down to $1, bounced back to the $1.40, $1.50 range, where it is now trading, and they have now a discovery focus heading into the new year, and they're very well financed. They have about $30 million working capital, and with all their plans for next year, they're budgeted about $10 million. So this is the kind of junior. It's not cheap, has 85, 90 million shares issued, but it is financially equipped to carry out with exploration work without further drilling, and one of their projects now has potential to grow a lot bigger than was the initial expectation.
Probe Metals spent most of last year trading at a 35% discount into its cash breakup value. Why was the market so negative about management's potential to repeat its Borden success?
Well, when Probe was spun out from Probe Mines as part of the Goldcorp takeover, Goldcorp ended up with 19.9%, and Bay Street was the dominant shareholders, and that would be all these institutions. And they had Jamie Sokalsky, who was formerly of Barrick, also on board the company. And the sort of the mandate from Bay Street was, find us an optionality play on which you can do feasibility demonstration work, and while we wait for gold to go to $2,000-$3,000, like all the luminaries such as Pierre Lassonde and Rob McEwen and lesser beings predict. And the markets at the time, gold was threatening to go down below $1,000 or even lower if Goldman Sachs was to be believed. So the market was saying, you know what, you're going to take this $20 million that you ended up with. You're going to probably bail out Bay Street on some worthless deposit, or get one of Goldcorp's hand-me-downs. You're going to spend your money doing this feasibility demonstration work, upgrading the resource category of essentially a deposit that is worthless unless a miracle happens and we see $2,000 or better gold that does not have a corresponding increase in the operating and capital costs of a gold mine. So yeah, the stock was trading at a 35% discount, and because the market was saying, yeah, the money's all going to disappear down some black hole on some worthless optionality play. And this was frustrating for people such as myself, because David Palmer is an explorationist by heart, and the Borden discovery, for which Goldcorp bought out Probe, was a grassroots discovery first brought to light by a pair of prospectors. Probe spent money drilling and established a lower grade open pit resource, but kept chasing the system and eventually found this much higher grade quartz shear type hosted system, for which was the main reason that Goldcorp bought it out. So David Palmer's goal is to create shareholder value by exploring and finding new deposits that work at the metal price that we have. So, but he had a problem of how you go about doing this, and absorbing Adventure Gold, and it was, a bit of a penalty for Adventure Gold. They only got 0.39 shares of Probe, but for those shareholders, it's gone well, because now life is being breathed into multiple new projects. Some of them are grassroots. The money is there. When you have a flagship discovery play and a very good treasury, then you can afford to step out and do more aggressive work on grassroots plays with interesting theories. And one of those I'm going to be talking about next week in an area where there are several juniors all tackling this idea that the Cadillac larder break actually extends far further west than the latest gold mine has established, and that it is fertile in this area, and that if you look in this area, you will find substantial new resources. So Probe's, I think, an excellent candidate for a much wider audience at the moment, based on the Val-d'Or East discovery and all these other projects that they have on the go, including the eastern extension of the Detour system, where SOQUEM, the Quebec government entity, is earning 50%.
John, thanks for the update.
You're welcome.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of Howe Street Media Incorporated.